Apple shares, they are weaker right now. The tech giant managed to beat expectations as its service business grew by 8%, reaching a record high of $21 billion in revenue. But overall, sales did slump by 1% on the call. Apple's CFO saying sales are expected to decline in the current quarter as well. Join us right now with more on Apple's prospects. I want to talk to Will Power, Baird, senior research analyst. Good morning to you. When you start to hear that things are not growing on a top line, I know people get anxious. Are you anxious? What are you thinking?
Well, Andrew, I think it was actually pretty in line with expectations. And by the way, good morning. Thanks for having me. Look, the quarter, I think, looked okay relative to where forecasts were. I think the story is probably on guidance, which was a bit more mixed. I think total revenue guidance a bit shy of where we in the street were. But the silver linings were they actually do expect iPhone revenue and services to both accelerate from what they just experienced in the June quarter. And the margins came in a bit better. And so I think that's one of the reasons you're seeing the stock down just a few percent here. And, of course, this was a stock that was up against near all-time high valuation levels. So it wouldn't be unusual to have some element of sell the news.
What do you think about the iPad and Mac situation? Looks like it's going to actually decline on a double-digit basis. And that's in large part because of the success they had prior. So let's give them credit there. But I'm just so curious how you think about that piece of the business.
Look, I mean, that business is expected to accelerate or to decelerate double digits in the September quarter. And that is disappointing, but you're coming off some tough comps. This has been a story that's been particularly resilient. Part of that hinges on timing of product launches. Fortunately for them, they've become smaller pieces of the business, right? And I think the street, for the most part, has become more focused on services in particular, but of course, iPhone, which remains the biggest part of the business. But my sense is, as you start to get in to better FX situation, easier compares as you move through the year, that some of those declines could start to moderate through this next year.
What's your expectation in terms of upgrade cycle? The phone come this fall for the phone, and then of course Vision Pro, which is effectively I don't want to say the goggles, but the goggles that we all know. Do you think any of that changes the dynamic for looking out 12 months?
Well, typically this is a stock that performs well in front of the next iPhone cycle. I mean, if you look over the last 10-year period or so, it normally outperforms by a couple hundred basis points in the month prior to that. We'll have to see with the new iPhone, right? I mean, I think everybody expects the normal evolutionary benefits. But look, this is a great annuity business, and that's why investors have been willing to pay up for it. It generates a ton of free cash flow. And I think, the next iPhone cycle is going to speak to the same trends that we've seen the last couple of years. Look, when you look at, Vision Pro, what it really speaks to is the innovation engine that continues. And that's one of the reasons that, we think investors are willing to pay a premium for the stock, right? And this opens up, as you think about spatial computing, a whole new long-term opportunity for the company. The company's enthusiastic, of course. Time will tell, right? We're not going to start to understand the revenue impacts until we get into next year. But it speaks to the opportunity, not only in spatial computing, but these other big TAM opportunities, right? What else might they do in healthcare? What else might they do in financial services to build upon Apple Pay and card and savings? There's still some nice growth opportunities still in front of the company.
We don't talk about the possibility of a car anymore. You think that's off the table now?
I don't think it's off the table. I think a lot of it's regulatory and how much they believe they can truly differentiate relative to what's out there. I don't think they want to be the next Tesla, right? They want to be able to leapfrog what's in the marketplace today in terms of EV capabilities. And that's really the question. But look, it fits right at the center of the intersection of software, hardware, and services. And that's where they've been able to differentiate in the past. And so I don't think it's off the table, but it certainly doesn't appear to be something that's coming in the next couple of years.
Okay, final question. We're at $186 on this stock. If we're talking a year from now, what do you think it'll be?
Well, we recently put in a $204 target price. I think it can be north of $200. But look, this is a stock where we'd be more aggressive on weakness given where it is from a valuation standpoint. As we noted earlier, it is at the high end of its historic range. But we think it can continue to creep higher from here.